Welcome to the weekly strategy session. Great to have you with me for another discussion on what's going on in the ASX, as well as copper, gold. We've got oil, uranium, plenty of interesting things going on to have a look at this week. And also, I want to have a look at any stocks you have of interest. So if you've got a stock ticker, we'll do those at the end. Just give me those codes. We'll call up the charts and have a look at how they're setting up. As always, everything today is general commentary only. It doesn't take your personal situation into account. Now, having gone through all those things to get us started, let's get into today's first chart. So I've got the ASX 200. It continues. The new all-time highs continue. A new all-time high yesterday on Thursday, pulling back a little bit at the moment, but nonetheless, this series of highs remains in place. And this has really been happening since back in February, where we had had an all-time high in February, and we've had this series unfolding ever since then. And of course, there hasn't been new all-time highs every day. We've had pauses along the way. We've had those periods of consolidation. The longest was this stretch in here between April and July, where the market went sideways along the moving averages. There's also been shorter and sharper pullbacks too. Like, who could forget August's sharp decline in over 3 or 4 days? So there's always a range of these consolidations that we get along the way, but they all do the same thing. They act as a counterbalance for the previous gains. Previous gains lead to periods of pullback and consolidation. It's how the process works its way higher. And I think that's all good. I think it's positive when we do get these pauses. I think they're positive, and what it does, it lets the market work off that previous advance, and I think it creates a more sustainable advance moving forward. When I get worried is when prices take off vertically, a near vertical rise, where there's excitement and there's speculation and euphoria. That's that's when I get concerned. But that's just not what we're seeing at the moment. It's I don't think people are looking at the current setup in the market and looking at stocks as a sure bet. They're not throwing caution to the wind. It's when we see those things, that's when I get worried. But the way I'm seeing this, what I see in the media, there still seems to be a fair amount of disbelief in the rally. I think that's positive for its sustainability. This latest rally we've seen, this latest move higher over the last couple of weeks, it follows a 4-week period where prices track sideways. I like that prices were able to hold above this support at around 8,100. I think that's a sign that there's good buying interest on the dips. So again, we're having a dip at the moment. Should this pattern continue, I'd expect that to find support over the days or weeks ahead. I think the sideways movement that we saw recently did bring prices back towards the 50-day moving average, and all up, I think that creates a stable platform for higher levels. I think another thing which is worth noting is that we're seeing strength in 2 key sectors, and these sectors are the financials and the materials. So I want to have a quick look at both of those. So just starting off with the financials, this is a financials ETF, ASX 200 financials ETF, and we've looked at this many times over the last. Since it broke higher back in December last year, we've periodically come back and had a look at this, and at the moment we had the financials rallying off their moving averages, the 50-day and the 100-day moving averages. It's picked the point in between and started to rally off those averages, and this is classic bullish price action. It's and I say that because it's what we often see in upward trends. We get periods where the market rallies, it pauses to consolidate, it comes back to the 50-day moving average or the 100-day, somewhere in between. The investors come in, buy the dip, prices rise, and the cycle continues. And that's been happening the whole way up. We've had these periodic pullbacks into the moving averages, and then we've had rallies off them. Nothing to say this can't turn into a larger consolidation, but at the moment that's the sequence that the market has been following. And the other key part of the market, which is what I want to look at now, it's the materials. We looked at this last week. This is setting up differently to the financials in that this sector's been a drag on the market for much of this year. It spent most of its time below its moving averages. What we're seeing now, we're seeing that start to swing around. We've seen that swing just in the last few weeks. It's gone from below the moving averages to above, and we're currently having this pullback back towards the moving averages. So I think this sets up the potential for a new trend. The last couple of weeks have seen it's one I'd call this like a typical reaction to a market that swung from below to above the averages. What we often see is that then it then comes back to pause to consolidate that initial run. And often we see the market start to track sideways, build a new base of support as the moving averages turn and start to rise. And then from there, that's where we potentially look for the next leg higher. We need to see how this continues to develop, but it's I think the price action so far is encouraging, and I think this could help drive further gains in the ASX 200 as we lead into the end of the year. There are also some interesting developments in the small ordinaries, in the emerging companies. I'm going to talk about them in a moment. And then also, of course, those stock codes for you, any stocks you're looking at, we're going to go through those as well. Before I get to that, one more chart I want to show you about the ASX 200, and that is the equal weight. I like looking at this. I've been looking at this a lot lately, and I think it's an important one to keep an eye on. It hit a 2.5-year high yesterday, and it's also, and yesterday, of course, being Thursday, and it's also just within a whisker of a new all-time high. Let me just compress this chart, and there's the all-time high from December 2021, and we're right beneath it as we record. It got within a few points of it on Thursday, pulling back today. Not surprising we're getting a pullback. It's been a strong run off that September low, but it just looks to me like it's a matter of time before we do see a new all-time high in the equal weight. I think the key takeaway from this is that what the equal weight is showing us is that there's broad participation in this rally. It's not just being led by a few of the big banks or BHP or just a few big market cap stocks. It's a broad-based rally with a lot of stocks participating, and this is important because this is what you see in healthy upswings. You get that broad participation. As I was saying, there's certainly some room for consolidation. We shouldn't expect the market's going to be up every week or even every month. There's going to be those periods like we saw and you can see it on the equal weight between April and September. We're going to get these periods where the market tracks sideways or zigzags lower, pulls back towards the averages. They're going to happen. It's part of the process. It's part of the way the market will make its way higher. But when you look at this price action, when we take in the whole scope of the price action, or also for the ASX 200 for that matter, if we look at the price action in the ASX 200, it's bullish structure. It's bullish structure where we have rising moving averages, price above those rising moving averages. I think the play here continues to be approaching the market from the long side. That's what I'm doing. I'm also using those wide trailing stops I talk about every week. I think they're an invaluable tool when we want to actively approach the market with our stocks. We're not buy and hold investors, but we want to be active investors where we're buying stocks, we're staying with stocks that are working, we're moving out of stocks that start to move lower or in downtrends. And I think the trailing stop is an invaluable strategy for being able to do that and do it with less emotion and do it consistently and effectively. And the great thing when you use a wide stop is you can see off these periods of consolidation, this August sell-off. Most of the stocks in my portfolio stayed in my portfolio. I wasn't shaken out by the August sell-off because I've got those nice wide trailing stops. But when we do get the big trend changes, like we saw during 2022, my trailing stops get me out when those conditions change. So I think they're a really smart way about being able to manage a portfolio and stay with your best stocks for as long as possible, because that's where I find the most money is made. They're made by a relatively small group of stocks in a portfolio, go a long way, rally a long way, and then by, of course, minimizing your downside on the ones that don't work out as well. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Tells YouTube you're watching, you're engaging. YouTube shows other people, helps me heaps. Now, I'm going to move on to the Small Ords in a sec. A couple of stocks. I've got a couple of interesting stocks to show you as well, which I've been looking at, which have turned up in the signals recently. So a couple of those to go through, as well as your stocks. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click it, come in, costs you not very much. If you want to play in the stock market, you need good information. Hopefully I provide that information, and don't be afraid to pay a few dollars to get the help which could make a difference to you. So think about coming on in. Now, let's move over to the small ordinaries.